Yesterday, we did a recap of the fundamental data released last week and what we saw happen in the currency market. Today, we'll be looking ahead. We'll be looking into a little bit of the future. What are the analysts expecting next week? And what do we ourselves also expect next week from the individual currency? Alongside with that, I made a little bit of change to the calculator. I added a little bit more information. So now we have categorized this news into three categories: the economic data, inflation data, and job data. This is simply because when I say lagging, leading, and coincidental, there's a disconnect between what people understand from what I say. So I decided to make something that people would be able to easily relate with, and then it would also make the leading, lagging, and coincidental information make much more sense when it's being said. So without further ado, let's head into seeing exactly what we are expecting next week to look like. As well as, if you're getting knowledge from here, do well to hit the subscribe button and share the video with someone who you think may need this kind of in-depth knowledge into the currency market. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. So we're going to go one currency at a time. Fastest way to do this. I don't want this video to be 40 minutes, 1 hour long. So we're going to start with the Australian dollar. Now, everything we have from the Australian dollar next week, that is going to be coming this week, is more of growth and inflation data. And something you will notice is none of those data have a forecast. So the analysts are not even like expecting anything. They're just looking at the currency and they're like, okay, whatever happens, happens. Let's see how it goes. Now, economic related growth information is all about the PMIs and the speculative positioning, while the inflation data we're expecting is the MI inflation expectation as well as the commodity price. Now, these two things are going to tell us where the real stance of the economy really is. Is it going expensive that people can no longer afford things? And also, is the economy growing? This is the sets of data we'll be getting from the Australian dollar this week. We also have the leading index. Do not forget, that's like important news. They are leading news in terms of economic growth. They are the first sets of economic growth news that tells you the economic growth is still going good. Now let's move on to the next currency. We have the Canadian dollar, the Canadian economy. Now in the Canadian economy, we'll be having one job related information this week, and the rest of it is more of inflation and economic growth. So the specific job related information is the average weekly earnings year over year, now not the month over month. So it's a comparison of at this time last year what was the earning, and currently this year what is the earning on average weekly. If we see a good representation, it means obviously over a period of 1 year people have gotten a better pay than they used to get. Meaning, if people get better pay, the economy is expected to grow. Why? Because with more jobs you get more money to spend in the economy. But the only problem with economic growth is it comes with the side effect of inflation. So those are the way the information relates. Similar with the leading, lagging, and coincidental information. Now this is the lagging job market related information. It's not the first sets of job news that tells you about the job situation. It is the last set of information that comes in the job information. So we also have things like the manufacturing sales. Now the manufacturing sales is predicted to be bearish. Why? So based on analysts, they've looked at the trending patterns and other information of the economy, Canadian economy. And though the previous was 3.3%, they are expecting a negative 1.1%. That is like a huge drop, as you can see clearly here. That means they are expecting that particular aspect of the economy that has to do with manufacturing sales to drop. It's an expectation. It doesn't mean it will be exactly. It could be met, it could be beaten, it could not be beaten. So we're still waiting for the information to come out. And this is tomorrow, December 15th. We also have one beautiful news here, the retail sales month over month. Now the the Canadian economy is also expecting a bit of growth. Now, the retail sales last release was negative 0.7%, and we're expecting at least a flat line this time. So if we do not get up to a flat line, then it's not meeting analyst expectation, and that is the Canadian economy is definitely going to be bearish. So this is like the major parts of it. Now, the next economy we're going to be looking at is the Switzerland economy, the Swiss franc, which is by far the most stable economy in the world. Why? It constantly sits on level ground. That is one thing about the Swiss franc. So it is just by far one of the most stable. Now, when we say most stable, it doesn't mean it doesn't shake. It will just mean compared to every other economy in the world, this has been seen to constantly over time remain the most stable among all of them. So what do we expect from these guys? We expect inflation data like PPI next week, and we also expect their trade balance as well as the speculative stance. Speculative stance comes out every week. It is the stance of the CFTC report telling us what the big traders are doing, the leverage traders are doing, the hedge fund traders are doing. It just gives us those reports and tells us, okay, this is what they did during the week. So those are all signs of economic growth. These are what we are expecting, and as you can see, there's no expectations in this place. We're moving on to now the European economy. This is one economy that has been booming real good recently. However, if you look at the expectation for this week, it is not actually good. The expectations are actually quite negative, especially for the inflation stance. As you can see, the three places we have expectations are all inflation related. As you can see, the ones we have bearish expectations, they are all inflation related. The CPI, CPI, and CPI. So CPI NSA, the CPI month over month, as well as the HICP energy and food expectations. So the rest expectations are neutral, right? So we're expecting the rest things to stay the way it is, and most of the rest things are still the inflation data. So what does this mean? It means there is a slight expectation for a small fall in the euro, not like great fall, like small fall, but nothing major. When it comes to economic growth, we don't have expectations to anything. We just want to see what's happening, and the economic growth is something that we look at and say, okay, whatever comes out, we can now start to work with using that information. We have things like the consumer confidence, which is a leading economic growth information. So if the consumers are confident, obviously you expect other economic growth information to be good. We have the trade balance coming out next week. We also have reserve assets totals coming out next week, which is really good news. Also, we have the construction output. Now, people look at this news and look at it like it's not important, but it is. I'm telling you, it is one of those key show factors of an economic growth. Why? So, construction materials and construction, is it ongoing? Are people constructing buildings? Are people constructing housing, things? Why is this an important information to look at in an economy? It's simple. So imagine an economy where nobody is building houses, nobody is building factory. It just tells you nobody is actually spending in that place. Simple, that's what it means. But if you see people building factories, people building houses, people building business centers, people building things, it means the economy is growing because people have money to spend to be able to afford to rent or buy those places because they need places to stay. It means people are also coming into that economy to join in the growth. Also, we'll be getting things like trade balance, we'll be getting the inflation news like CPI. Now, when we talk about inflation, most people think it's only CPI. Those are like the major inflation related news. There are a lot of inflation related news. The CPI is one of it. It's not the only one, it is one of it. Now let's move on to the next economy. We have the British pound economy. Now this recently has been in a downward spiral. Not really, it's not bad, but it's not been really good as it used to be. Let's just dive into a little bit of deviation. This is the British pound economy, and if you look at the general growth data, it is bearish. The general inflation data is quite neutral, but the job data is abysmal, very abysmal. Coming back to, if that is the situation as of now, what do we expect next week? Well, the only expectation, as you can see right here, that is clear is that the interest rate is expected to get cut. And how does this affect an economy? Well, it's simple. Cutting interest rate is telling the people, okay, we don't want you to pay so much money you used to pay as interest when you collect loan, or if you have loans to pay, so that you can be able to achieve your loans as fast as possible. So imagine you are a big dealer, right? Imagine yourself as a big dealer. You have about $100 million of loan, and you have to pay 12%. It means you're going to have to pay 12 million as interest. But imagine a situation where, because they cut the interest rate, right? They cut the interest rate. It means you're not going to have to pay up to 12 million anymore. You're going to be paying something like 10 million, around that 10, 11 million. So alone, you've already cut off, like, without doing anything. The central bank just made you, or happily cut off part of your expenses from your loan debt. It means a lot of businesses are going to look forward to getting more loans so that they can promote their business to grow and get more money. And if they are growing, obviously they will get more workers. Getting more workers is helping the job economy. Getting more people helps the job. More people on the job space means more people now have money to spend. More people have money to spend means more people are going to go to the market and buy products. So it's a circle. The economy is literally a circle, as you can see right here. What you also notice is, mind you, it is an expectation. It doesn't mean the BOJ is going to come out, the BOE is going to come out, the Bank of England is going to come out tomorrow morning and say, yeah, because everybody's expecting, we'll cut it. No, they might decide to still hold their rate. You can even decide to increase their rate based on how they see all this data. It's still expectations for next week. Now, apart from this information, we have job data coming out. The job data, the climate count change, the unemployment rate data, the earning index data, and the employment change 3 months over 3 months. So the 3 months changes month over month. So in the last 3 months against the 3 months before that, what is happening? Is it getting better or is it getting worse? There's no expectation. We're just waiting to see what the data does. We also have CPI major inflation information. As you can see clearly, one thing you will notice is a lot of information regarding inflation is coming out next week for so many economies, and it just goes to tell you, next week, gear up. There will be moves in the market, and it is most likely going to be the moves until next year. So lots of people either buying and closing during the week, lots of people selling during the week, a lot of people entering and waiting for positions to move till next year. And for short-term traders, that is extreme volatility. As you can see, it clearly shows there will be crazy move. Either it's running in one direction instantly, or it's completely flatlined instantly. Moving on to the next economy, we have the Japanese yen. This is one of the reasons why I switched to investing.com. On Forex Factory, you would not find so much information for the Japanese yen, but over here on investing.com, I see a lot more. I see things like the entirety of the fact that the economic information for next week is a lot. It is a lot. Machine orders, the expectations, the export imports, the adjusted trade balance, the foreign bonds, and all that stuff. Now, there is no expectation from the analyst angle as of now. There's no expectation. But however, judging from what the economy was, right, what it is, you can see the inflation market is good. However, the job market is not so good. But recently, the job market has been catching up, which within the last 14 days sets of news, the job market has been really, really catching up. So we are expecting economic growth to start showing some signs of growth in this place. Moving on to the next directly phase, I would have said the NGN, which is the Nigerian economy, but we'll put that on the side for now. Entering the New Zealand, the Kiwi dollar. Now, same thing, a lot of economic growth news and a little bit of inflation news, but just one inflation news, the trade price index. All this information have no expectation, but taking a look at what we are currently standing at, we have good economic growth on the New Zealand end. We have a flat inflation situation, not bad, not good, but the job market is where they are finding it quite difficult to catch up. And now they are not having any job related news, so you may not see crazy move, because the moment you see job related information, then we will see crazy move. But from the ones we have here, we have one thing that I know for sure is going to really shake the grounds. We have GDP information coming out next week on Wednesday. Prepare your mind for that if you're trading the New Zealand pairs. Be ready. It's going to be a good ride, especially that particular situation. And then the net debt forecast. This is on Tuesday. So this is a leading economic information. As you can see, it is a leading type and category economic growth. So what does this mean? This predicts what the rest economic growth news is going to start aiming for. That is what it does. Now, how does it do that? Well, debt forecast. They are looking at how much debt they are going to be incurring. What is the expected debt forecast for in July? What happened like back then in July? You looked at that situation and they'll be like, okay, it means we need to reduce our hands on this part of the economy. If it's good, then it means, okay, we can still go ahead and take a little bit more risk on this place, and this place in the economy. That's the way it works. It's just like running a business. Moving on to the last but not the least, in fact, the one thing that really shakes every trader, the US economy. Now, the US economy is the king of it all. It has every single data every single time. We have the economic data, inflation data, and job market data. Now, for this particular market, we're going to have to go a little bit in depth. Before we go in depth, let's look at what we had prior. Well, we had good economic data, which is average. We have really good job market data, which is surprising, except in the last recent 4 days where the data is not nice at all. But generally, we have an average good job related data. But the inflation data is where there's scare. So inflation is sticky, and you must have heard that a lot of times. Now, let's see the expectations for next week. Unlike other economy, we're going to have to dive in a little bit deeper into this. So for economic growth, we have expectations. We have expectations regarding the building permit and house starts, which is, like I said, if they are building things, or rather making up buildings in an economy, it is obvious that it means growth is going on there. So the expectation is a bullish move, meaning we're expecting the building permit data and house start data to be quite good. We're also expecting retail sales data to be quite neutral, and that's still okay. We are expecting retail control to be bullish. We're expecting business inventory to be bearish. Now, that's not really good news, but it's expectations. We are expecting the Atlanta Fed GDP to be flatlined. We are also expecting consumer information to be neutral, as well as the Michigan current conditions. So expectations of the economic news, majorly from the US end, is majorly towards the neutral bullish area. Doesn't mean it's going to be neutral bullish. It's just expectation. Again, I say this, it's expectations. All of this, looking at all of this, we also have a lot of crude oil information coming out. We have the Fed balance sheet coming out. But there's a news that I really want us to look at, and I'll get there pretty soon. So looking at inflation data, we have CPI, which is coming out for almost every economy, as you can see. We have the exports and the imports, as well as a lot of inflation data. All this inflation data, the only expectations we have is regarding the Michigan first year and 5 years inflation expectation, and they are both expecting neutral stance. Not bad information at all, not bad expectations. The final hit, which is the job market. Now, this is where the Feds are really looking out for. We have NFP coming out next week. On Tuesday, miracles are happening. Like, if you don't know NFP as a trader, I think you should roll back your sleeve on Tuesday and just sit away from the market and observe. NFP, one of the biggest hits in trading, shakes the market very well. That one candle can make and break your account if you are over leveraging, especially on the lower time frame. But people who trade like myself as a swing trader, we don't even feel it. But moving on, we have unemployment rate also, another big news. Unemployment rate is coming out next week, and we are expecting somewhat neutral grounds. If it comes out really this neutral, it means November was a good month and there is far less scare to hold in the market. If it doesn't come out good, we already know the US economy seems like it's tanking to an extent when it comes to job and inflation. It is quite sticky. So this two specific news I just called out, watch out for them very well. They are like extremely important. They will decide a lot of things. So we have literally looked at every single economy in the markets, the expectations we have for next week. And with all of this in mind, I think you should have like expectational positionings for yourself. Okay, should I start buying the euro? Should I start selling the dollars? Should I start selling the pounds? For me, I think my best view all over this whole place is still the European economy in general. It still has one of the best view, in my opinion. However, with that doesn't mean it's going to work. I'm just some random guy on YouTube. Don't take advice from me. Do your due diligence to research the stuffs too. This is looking at data. You could also do this. Look at data. I have a class for you to learn how to do this. I'm going to put it up on the screen here. Apart from that video, do want to watch the other video regarding what happened last week. See you all at the end of the whole day tomorrow. Peace. Bye for now.